Welcome, folks. Anthony Taylor here, and this is the Strategy and Leadership Podcast. Thank you so much for joining us. On our podcast, we interview senior leaders and thought leaders, and that'll help in the area of strategy and leadership. And today, I get the pleasure of being joined by Henry Daas. Henry, how are you today?
I'm doing great. How you doing?
Oh, I'm awesome. I know we connected a little while back, so for our listeners at home, Henry is the author of FQ, Financial Intelligence. He's got a background in entrepreneurship, and I'm just really excited to be able to bring a slightly different perspective to the podcast today. So, Henry, why don't you tell our listeners a little bit about you, where you're from, and how you got to where you are now?
So I am I'm a New Yorker who finds himself living in rural Connecticut. So we just moved here in the smack dab in the middle of the pandemic. We bought a house up here in bear country. You know, it's kind of unusual to see black bear when you drive down the road, but that's country living. Last 30 years, I've been a serial entrepreneur. Last 10, which I have been a entrepreneurial coach and a personal finance coach as well. It's kind of my life story in a nutshell.
Cool. So why is it important? I mean, money makes the world go round, as we say. Why is it important to be able to have financial intelligence?
My dad used to say, I've been rich, I've been poor. It's sure nice to have money. Financial intelligence, the way I differentiate it is people talk a lot about financial literacy. So I kind of wordsmith that and say, well, what is literacy? Your ability to read and write. I know plenty of people who can read and write really, really well that I wouldn't hire to, babysit my dog. There's a lot more to it. You've got to be able to take the data that the world is throwing at you, and there's a ton of it, and create some original thought out of it, and apply some critical thinking to, managing and growing your money.
Yeah. So I know that there's a lot of, business. So people listening, business owners, entrepreneurs, I see a lot of entrepreneurs and business owners that are technically good. Like they're good at what they do. They are good at making a widget. They're good at selling a widget, but they might not have ever learned that sort of the skill of money management, and then especially like organizational finance. So what are a couple things that business owners, we'll talk to the business owners specifically, need to consider as they're growing and developing their own capacity for managing money?
Well, I'm stunned that there's such a lack of intelligence in what I consider to be really basic stuff. I don't want to be cavalier about it, but people don't fundamentally understand the difference between a balance sheet, an income statement, a statement of cash flow. Some of the stuff that's really nuts and bolts. I'm astonished sometimes. So you've got to start at a grassroots level and get an understanding of all of the financial levers within your business. I met a guy a long time ago who was basically old school managing it. If he had money in their bank account, then we must be making money. I kid you not. The whole concept of accounts receivable, accounts payable, contingent liabilities, all this technical stuff. Now, I'm not asking you to be a guru and a CPA. You can hire people to do that, right? But you have to have a basic understanding. I'm talking about stuff that's fundamental. And then you got to go from there and figure out, a friend of mine told me probably 40 years ago, he said, look, you can analyze almost any company by looking at two things, cash flow and gross margin. It's an oversimplification, but I even have it on one of my type forms when people come in to set up a strategy session. And I ask, what's your gross margin? And the last answer is WTF gross margin. And I've had people actually check that off when they come in. That's not acceptable to me. I'm sorry. I know I'm old school, but you got to know these things. You can't run a business without it.
Okay, so given that obviously, there's obviously a section of the population, and probably a pretty good one, that, if they're talking to you, that don't know these things, like what are some of the things that you're like, okay, let's say you're a layman, and you want to understand this, like what are some of the concepts either within your book or that, you know, you start at a foundational level for people to build on, and that will help them build a stronger company long term.
Well, my book is geared towards personal finance, so I use some corporate finance stuff as a as a model, but it's really more a balance sheet would be the equivalent of a statement of net worth, right? What kind of assets do you have? What kind of liabilities do you have? Right? A P&L is pretty much a P&L, but there are things that go on in corporate finance like depreciation and all sorts of other stuff that, you know, if you're a real estate investor in your personal portfolio, sure, you might bump up against it, but 9 out of 10 people are never going to see that in their personal world. So there are really two species of two distinct species of the same genus, I guess is what it is, the personal and financial, the personal and the business side of it, with a lot of commonality. As an entrepreneur, you're playing the straddle, right? You're managing your business finances in one way, and then it bleeds over into your personal financial situation. So a lot of situations that come up have to do with what's the most efficient way for me to take money out of my company? How do I do that in the most tax advantaged way, right? There are situations, depending on how you structure your company, where you'll end up with double taxation. That's not good, right? You don't want double taxation. It's bad enough for most people that they get single taxation, no less double. So I don't want to go too far down that rabbit hole, but I think it's important for people to understand that you need to have a well-rounded knowledge in both disciplines, even though, and the benefit of it is that 80 to 90% of it is pretty much the same. Does that make sense?
Yeah.
I kind of went around in circles a little bit, but that's just the way my brain works.
Yeah. So if we think of the entrepreneur and then we understand that, you know, getting that basic financial knowledge of understanding, and we're looking at the individual at this point, understanding cash flows, understanding your word, minimizing tax, that kind of stuff. And then, you know, you've been able to build up your business to a point, maybe you're making a couple $1 million. And obviously, like, people have, or I imagine people have financial advisors, because I get, you know, dozens of financial
If you're making a couple $1 million, you should.
Yeah. So what are some, for the business owner clients that you deal with, what are some of the really big considerations that they should be thinking about as they're moving forward, as they're growing their business, and as they evolve in their financial capabilities, I guess is the question.
Well, if you look at the business itself as its own little organism, right, you could almost go so far as talking about corporate personhood, right? When you go get an EIN number, it's the functional equivalent of a social security. You're kind of spawning a new entity, right? And it has a life of its own, and you kind of need to treat it as such, yet you are attached to it, obviously, by this financial umbilical cord. I think it's imperative for people to look at it as a universe. There's all this money, and this money flows back and forth between the two. And you need to look at the distinct money silos and manage those. I don't expect people to be an expert on every facet of, you know, corporate finance. Hardly. That's what you hire, like you said, financial professionals, CPAs, bookkeepers, etc. But it's incumbent upon you to manage them. I know from my own personal experience, every time I've abdicated responsibility to a so-called professional without providing guidance, things have gone badly. And I'm going to be able to provide better guidance to them if I have some basic level of financial intelligence, right?
Yeah.
It just makes you a better leader, makes you a better entrepreneur. This is something that I'm constantly hammering home to my clients. Some of them are whizzes with their numbers, but I would say on a whole, 1 out of 5 maybe would be a whiz and knows every little thing. Sometimes it gets to the point where they're so involved in the finance that they're missing other parts of their business. It's like, hang on a second. You're not the CFO of this company. You might be acting as one, but that's not your primary job, right? You're the owner, you're the co-founder, right? You're the CEO, whatever. And if you spend all your time like King Midas in there hoarding your shekels, you're going to miss a lot of stuff that's going on in the business.
Right.
Right.
So
sometimes I got to pull them back.
Yeah, absolutely. So there's a smaller group of the population that has deep financial knowledge, and then for the most part, people are we'll call it average or pretty good.
I would say below average, to be honest. But I'm a tough grader.
So what are the top 2 or 3 things that business owners need to consider, in order to be able to improve their overall performance?
Are you really, we'll keep this really basic. Are you really making money? Right? I mean, are you making money in a sustainable way? Right? I talked about margin. My first business was in the IT business. I actually started as an Apple valuated reseller back in the late 80s, early 90s, when such a thing really existed, long before Apple was the juggernaut that it is today, and all the Apple stores and all of that sort of stuff. And I noticed what I call margin erosion or margin compression. Each year that went by, there was less and less margin in our business, in the hardware side of our business. In addition to that, we were growing, and we grew it all the way up to a $4 million company. So even though my top line was growing, I actually was making less money because my margins were going away. That's not a formula for sustainable success. It just isn't. Do you want to recognize that after it's too late, or before, when you can still do something about it? Right? We want to be proactive. We want to make proactive decisions. There's an old saying, if it ain't broke, don't fix it. Right? But there's also another wonderful idiom, ignorance is bliss. Right? So you may not think it's broken because you're making some money, and by all outward appearances, things look hunky-dory, when the truth is it's not. And you need to recognize that, or you need to hire professionals to help you recognize that, because there's danger lurking around every corner. You know that.
So one of the things being margin erosion, and how do you figure out is there a specific process that you go through? Is it just making sure that you check your financials?
Calculate your margins, right? Yeah, it's not that hard. Say to your accountant, I need a report. I need to see where my gross margins and my net margins are.
Got that.
Right.
Okay.
Gross margin being, taking out cost of goods, right? Net margin being taking in all the other ancillary expenses that go along with it.
Yeah, for sure.
Right.
Okay. So
not hard to figure out. I did it year after year, and I saw 1% to 2% erosion. Now, again, we're talking about a low margin business, so we were in the 20s, and 10 years later, we're down in the single digits.
Yeah, absolutely. So, what is something else that, from a business owner perspective, that you might have experienced yourself? What is something else that business owners have to be aware of, even if they have somebody that is looking after their financials? For example, I had an accountant who was supposed to be looking after my financials, and my business partner was taking money out of our company. So I didn't have the financial savvy to actually be aware of what was going on. So what are some of those risks or traps that business owners might not see in their financial planning? We'll go from there.
Well, but malfeasance or embezzlement, some people are really good at it, and it can be tough to see. I shouldn't joke because I've been the victim of it myself. So you can't be a constant watchdog or anything like that. That gets difficult to manage over the course of time. There's a couple parts of the financial equation. One that I talk about a lot with clients is credit facilities, right? So make sure that you have ample cash available, not only for a rainy day, but for situations where sometimes you get a growth spasm and cash gets tight. So you need to have those credit facilities in place before you need them. Right? People say, why should I go out and get a $500,000 line of credit for my business? I don't need it. Right? It's like, yeah, but the day may come when you do need it. And when you need it is not the time that you should go out into the world trying to find it, because that's when you won't get it. right? And I have clients who have, 7-figure credit lines that they never touch. And that's great. That's good. That means they're managing their business well. But it's nice knowing that it's there. The other side of the equation, and I've been a victim of this, of my own fault, is don't be a bank. Unless you're a bank, unless the business you're running is a bank, don't act like a bank, right? Collections is tough for people. I have a phrase I say, you can't wear the gray hat. If you're a small entrepreneur, right, running a single-digit headcount business, and there can be big businesses. We had a $4 million business with a headcount of 5, right? So it can be done. But sometimes people are too liberal with their credit terms because they want the business. And then the situation kind of pivots on them, and all of a sudden they're owed a ton of money, and it's net 60, and it's net 90, and it's net 120. And before you know it, you're giving your clients interest-free loans. That is a trap I see over and over and over and over again. Sometimes no business is better than bad business.
I get
that's a tough one for people to swallow sometimes. I had a client a number of years ago that had a very interesting paradox. He had all these micro clients. So these were people who started when his company was very little, and they were paying way below the going rate. One client was paying 10% of what the rack rate was at the time for their SaaS services. Right?
When you say rack rate, you mean?
Meaning if the current rate is $2,000 a month, this particular client was paying $200 a month.
Oh, okay.
I said, we did analysis, a big spreadsheet of it, and they were leaving significant 5 figures on the table with all of these customers. And the issue was, well, you know what? His argument back to me was, these people were back when we first started. They took a chance on us, and I feel bad now, all of a sudden just raising them up to today's rates now that we're a much bigger company. And I get that. I appreciate the loyalty. But you still need to create a roadmap, because I said, if you fired these clients, these $200 a month clients, you'd be making money, because the cost to service them was actually greater than what you were charging them, right? It's costing you $500 a month or $800 a month to service a client who's paying you $200 a month. At least get them neutral, right? I mean, isn't that reasonable? Yeah. Come up with a roadmap.
So what I hear in a couple of key themes here, because I know we sort of bounce between the business finance, the personal finance, and then
I bounce around. That's what I do. You know that.
Yeah. Well, and trying to look at, hey, what are some of those key considerations for business owners? And I really heard it under three themes, and where most probably look at just like top line revenue and bottom line profits, because those are the easiest to track. But then, just like you would do sort of a organizational review or a strategic plan review, that it's important to review your finances, like with your accountant if you're not doing it, but looking at, and I heard 3 things: margins, most notably, your accounts payable and your accounts receivable. And you don't need to be a genius about it, but you do need to have enough understanding to be able to look at the trends. So say over a couple of years, what are our payment terms? How much is it costing us to being able to service this business? How much is it costing us to be able to maintain the business? How much money, even just like money in, money out, we're borrowing money to run the operations, we're funding our customers. Some people have, turnover of $2, $3, $4, $5, $10 million a year. Like that cash conversion cycle can be a killer, and it erodes those margins. So anything that I missed in terms of that summary?
No, you hit that. The thing that's really important to recognize in this, in case people get scared, like, oh my God, all of this stuff is crazy. You learned everything that you need to know on how to do this probably by the 6th grade, right? I mean, this is not calculus or differential equations or rapid algebra. It's not. If you can add, subtract, multiply, and divide, you can do pretty much all the work that's necessary to get the data that you need. Don't be intimidated by it, because it can be very intimidating. Remember, as we started the conversation, you're in this to make money. Even if you are a philanthropic business, you have to make money to pay people, right? The more money you make, the better people you can hire and the better business you can do.
So I know you said don't be intimidated. My wife and I joke that we say just don't be sad. Oh, okay. So thanks. I didn't think of that.
Don't be sad.
Just don't be sad. So when we
Fake
talk
it
about
till you make it, right?
what can some steps, if you're saying, hey, you're trying to improve your financial, in like your FQ, your financial quotient, financial intelligence, what are like 2 to 3 steps that you recommend to all the people, like when you do seminars and stuff? What do you recommend to people as starting points? Just like one thing you can do to improve your financial confidence.
There's so many resources out there. If you like videos, go find videos, right? I was talking to one of my clients about doing Monte Carlo simulations. I don't want to bore folks with what those are, but those are essentially, you do 5,000 iterations of a scenario, changing variables, and you can calculate certain things. Financial planners will use it to determine if you've got enough money to retire and not run out by the time you die. So he didn't know what a Monte Carlo simulation did, but he found some stuff on the internet and learned himself up. If you like videos, go find them. Go on YouTube. There's tons of them out there. Find somebody that you like. There's probably a zillion guys out there who can explain what a balance sheet is. If you don't like videos, if you like to read stuff, there's books, there's other resources. The world is just awash with knowledge and data, just waiting for you to come and get it. But stylistically, everybody has different learning styles. I'm a word learner, right? I learn by reading stuff. I'd much rather read something than watch a 5-minute video. Except when I'm trying to fix my dishwasher and I need somebody to show me the steps I need to follow. Then I go on YouTube and I find the guy with the plumber's crack and I save a couple $100 fixing my dishwasher the old-fashioned way. It's all out there. You have to have the want and the desire, and you have to see the need for it in your business. It's easy to just shrug it off and say, hey, you know what? We're doing fine. I don't need to go crazy about figuring out all of these numbers. And that will work until it doesn't.
I got that. So I think one of the key things that I'm taking away, Henry, is, for any business owner, any entrepreneur, anybody who is interested in improving their financial ability and capability, that there's information out there. It's a matter of making it a practice, like all things. If you want to get healthier, practice healthy eating. If you want to get stronger, practice going to the gym. If you want to make more money, practice good money habits. Develop your muscle of being able to attract money, of course, but also keep it. If you can't keep $1,000, you won't be able to keep 10,000. You'll be able to keep 10 million, and there's enough money out there to keep you going. And then in terms of practical things, for any business owner, stick to the basics. Look at your accounts payable, accounts receivable, cash flow, margins. Develop the ability to interpret those financial statements, and you'll be in a much better position when it comes to tax time, when it comes to financial planning time, and then eventually, when you do hire that person to take on that full responsibility in your organization, you'll be speaking the same language. So
exactly. And then you'll be able to manage them, and you'll have a nice, calm, nurturing relationship. Yeah, right. Which is what we want. We want things to be calm in entrepreneurial world, because they generally are not. They're chaotic.
Yeah, exactly. Right? I know we're on a bit of a time crunch today. Tell our listeners where they can get your book, a little bit about your book, and where they can get a hold of you.
So the simplest place is to go to my personal website, Henry Daas, HenryDaas. If you misspell it, you'll still get there, because people misspell my name all the time. It has links to my coaching site, my FQ site, all sorts of personal stuff that I do. Right on the homepage is a link to download my book for free. From BookBaby. I give you a coupon. You'll get an email with a coupon for 100% off. So I get lots and lots of people who download my book. Bezos is the only one who makes money from books, so I'm happy to give it away for people to learn from it. It's a monstrously large 432-page book. It's specifically personal finance, But like I said earlier, 80 to 90% of it applies to business finance as well. And all you got to do is have the desire to read it, right? And go through it and do it. It's not that hard. You know, I was talking to somebody years and years ago, and I said, you know, all those exercise videos that they sell, like P90X and blah, blah, blah. I challenged them. I said, you know, every single one of those works. I've actually tried a few of them and they work. You'll get in shape. What it can't do is get your Cheetos eating ass off the couch. That it can't do. Only you can do that.
Well, there we go. So, I don't know.
How's that for sucking all the air out of the room?
That's really something. But thank you, Henry. I appreciate that. I think it really gives people at least a place they can take next and on their journey for financial development and financial understanding. So thank you for that. We put a link to the book in the chat. Also, if you are interested, please do connect with Henry on LinkedIn. So thanks, everyone. Appreciate you joining us today on today's episode of the Strategy and Leadership Podcast. Our next event happening live is going to be October 21st. We're putting on a big diversity and inclusion summit. So if that's something you're interested in, be sure to check us out there. And once again, our guest today, Henry Daas, who is the author of FQ, Financial Intelligence. So thanks so much for joining us today. This has been the Strategy and Leadership Podcast. My name is Anthony Taylor. Thanks so much, and we'll see you next time.